I'm Jim Schultz, and this is Options Uncapped, the morning edition. Welcome to the show. Welcome to the broadcast, man. Welcome to the Friday edition of what it is that we are trying to do. The Friday AM edition of what it is that we are trying to do. This is the Jackson Hole edition of what it is that we are trying to do. Man, I really hope you guys are well out there. Thank you guys for being part of the show, being part of what we're doing with OU and all of those things. And so, you guys this morning have one job. You have one job only to do. You have one task to complete. And by now, you should know what that is. You need to be down in the chat with your questions, with your comments, with your stories, with your jokes. Put them down in there and pump that algo. Man, give it a weekend pump. Give it a Friday pump going into the weekend. I need it. It needs it. Man, let's go. So a couple of housekeeping things before we get into the show this morning. So number one, today is a double feature day, so I will be with you guys for the morning. I will also be back with you guys for the afternoon. So we've got the morning show. We've got the most important Jackson Hole speech announcement of our lifetimes, without question, bar none. And then later on today, I will be with you guys at 2 o'clock. So that's the first housekeeping thing. The second, oh wait, actually, hold on. So on that, so wait a second. So guys, let me just pull up my my Slack so I can see. Oh, thank you, Ryan, for muting the YouTube. We almost did it again, man. We almost did the YouTube echo chamber. We almost did kind of the reverb edition of the program, but Ryan saved the show again. So thank you there, Ryan. I'll try to get better at doing that myself on my end. Ryan has essentially removed all tasks from my list of tasks. Because if I have the task on my list, it's like a 43 delta that it actually gets completed when it comes to getting all the things ready for the show. So shout out to Ryan for running everything behind the scenes. Everything is going so smoothly and is 110% because of all of his work. So speaking of things that are happening, guys, I am so excited for this afternoon show. So this afternoon, as I alluded to earlier in the week and as we talked about before, we are going to have an options quiz. So later on today, it's going to be interactive, right? You guys are going to be able to take the quiz alongside the actual question. So come with your knowledge, come with your skills, and come with your abilities. And I don't want you using technology. I don't want you going to ChatGPT. I don't want you going to Gemini. I don't want you going to Claude. I mean, Claude still doesn't really know the difference between a long put and a short put. And so maybe if you did use Claude, you're going to get crushed on this quiz. And so I am super pumped. We are going to take this quiz later on today. And so, man, look at Danish Dynamite sneaking in with the breakfast on me. Man, I appreciate you so very much, my friend. Yes, that gets me what? Halfway to a sausage McGriddle? Man, that's a pretty good start. That's a pretty good start indeed. Thank you there, Danish Dynamite. I appreciate you so very much, my friend. So very much. So this quiz. So the questions are all done. The questions are done. They're ready to go. I cannot wait. So this brought me back to my professor days. This brought me back to my days back in the classroom. And oh my goodness, I had so much fun. Oh my gosh, I had so much fun doing quizzes, doing exams, doing random exams. We used to have random exams. I'll talk about that more another time because it's a bit of a longer story, and I do want to get into the markets and show you guys. I did do one trade last night that actually worked out okay, and then we've got Marvell. Pour one out for our Marvell position, which is about to go. Ooh, there's a huge thunderstorm. Did you guys hear that? I mean, there's a huge thunderstorm happening, so it's about a 60-65 delta that we lose internet. And so if we do, hopefully I'll see you guys on the other side, but it very well could happen because it is a huge storm right here. But I want to get into trading. We'll talk more about that later. But man, I cannot wait for this quiz later today because you guys are going to get crushed. I cannot wait for this quiz. There's all kinds of booby traps. There's all kinds of like little like mouse traps I've set along the quiz questions. Oh, it's great. There's the alwayses, there's the nevers, there's the always nevers and the never alwayses in the same question. Oh my gosh, it's going to be so amazing. I cannot wait. You're not going to want to miss this afternoon show. So Ryan, bring us into the market. Let's take a quick little look at what is going on. Okay, so right now, it appears at first glance that everything is looking okay. But if you look under the hood a little bit, like if you're like, I don't know, man, maybe I should check the oil. Maybe I should check the air filter. Maybe I should give the serpentine belt a look. And by I give the serpentine belt a look, I mean Autumn gives the serpentine belt a look. The Marvell position, it has seen better days. And so, earnings giveth and earnings taketh away. And so, unfortunately, this morning, we are in the taketh away type of section. We are in the taketh away part of that statement right there. And so NVIDIA worked out really, really well. Marvell, this guy is 100% going to zero. And so that cash has been fully set ablaze. This cash right here, it is gone. We are going to say bye-bye to that mark price right there. It is going down to zero. In fact, I have a sneaking suspicion that the fine folks at Tasty Trade, they're not even going to give us a mark price. This guy is just going to collapse down to a blank value, to where they don't even give you the respect of throwing like a penny on your name. Right now, we know you're not even going to get that penny, but at least give me a little bit of hope. At least give me just a little something there on that mark price. I don't even think we're going to get that. I think we are going to get a blank mark price here on Marvell. And so Marvell is going to be over and it's going to be done with, which is a little bit sad. But then again, at the end of the day, right, it's like, NVIDIA, we made what, $4.50 approximately, right? So NVIDIA, we made $4.50. Marvell, right, we're going to lose $3, let's say, just to make it really, really simple. We're going to make $1.50 on this guy, right? I'm going to come out $1.50 ahead with the two earnings trades. I'll take it, man. I'll take it. I mean, that's a handful of BEUs, right? Bonefish equivalent units if you are brand new to the show. That's how we make this stuff tangible. That's how we make this stuff real. And so when I think about earnings trades, it's like, man, if I can do a couple of earnings trades and I can come out ahead, like that's pretty good because earnings, it's an engagement play. Like earnings, for my money, it's not the thing that's going to get me where I'm trying to go. Where I'm trying to go is going to be premium. Where I'm trying to go is going to be options. Where I'm trying to go is going to be EQTs. It's going to be things like that. The earnings trades, if we can come out ahead to any degree, I consider that to be a pretty big W. And so NVIDIA and Marvell, there you go. Man, look at Orgdenu. Just snuck into the chat. Man, thank you, Orgdenu, with €5. Man, I appreciate you so very much. Says, man, I lost $150,000 before I met Dr. Jim. Finally, I'm earning consistently. Please follow him. He explains the transparency, simplicity, and honesty. Orgdenu, man, I appreciate you. Orgdenu, great guy. Been a friend of the family for so long, man. Thank you so much for supporting. And guys, never feel like you have to do this. Never feel like you are required or you are pressured to do this at all. I just appreciate you guys being here and being a part of the show. But yes, Orgdenu is a great example of what is possible for everybody that takes it seriously, for everybody that wants to commit to options. I really, truly do feel like, man, what we can get, what we can tap into with options, with short premium, it can't be matched in the financial marketplace. It really, truly can't. And Orgdenu is an example of that. Like, he's an inspiration to us all. Like, whether we've been on the losing side, I most certainly have, and I think a lot of traders have. And so it's like, whether you've been on the losing side and you've kind of turned it around, or you're starting from nothing and, kind of paving your way forward, I'm all in on this. I'm all in on this. I left Tasty to do this and go all in on this. So I'm super excited about the possibilities and the potential. And Orgdenu is a good example of what can be done. And so, all right, so there's NVIDIA, there's Marvell. Let's go ahead and let's talk about what we did last night. Another housekeeping thing really quick. So I really think that what we're going to do, I'll even grab my, let's grab a little diet strawberry. Just to kind of, just do a little something. So, number one, thinking about the structure of the show. So, I kind of think the way we're going to do the show, so for the AM show, and again, don't hold me to this, but I'm thinking about how we can make the show a little bit more structured. I like the free-flowing nature of it. I like the fluid nature of it. So it's never going to be so rigid to where we're coming out, we got PowerPoint presentations, I'm showing up with a shirt and tie. Like, if I show up with a shirt and tie, and we've got a PowerPoint presentation, and I'm trading iron condors, somebody come get me. Like, somebody come get me, because this thing is going down fast. In fact, it's going down so fast, it's already done. Like, it is over. So if that happens, something went very, very, very wrong. But still, I do think, we can probably add a little bit more structure around the edges. We can probably add a little bit more, I don't even want to call it rigidity, but can we offer a little bit more semblance of, all right, we're doing this at this time, we're doing that at that time, and then we kind of see where the wind blows us around those edges. I think that can make a lot of sense. But I think in the AM, essentially what we're going to do is, obviously we'll spend the first 10 to 15, we just got to we got to get loosened up, right? You got to do, like some cat cows. You got to do, maybe some thoracic extensions, maybe get the scapula loose, especially for me since I'm working through a scapula injury that I've had for a very, very long time that I'm hoping I can finally fix one of these days. But we get loosened up and we talk about, what I did, that morning or, my previous trades, right? This is the basic idea. And I'm going to talk about my nighttime trade here in a second. But we talk about previous trades. And then, obviously, the market opens at 9:30. we're going to trade for about 10 minutes or so. And then I'm going to spend, the rest of the show doing questions. Right, so that's kind of what I'm thinking. And then in the PM, it's going to be a little bit different because it's a lot slower, right? A lot of times the afternoons are a lot slower. And obviously, if the markets are super active, we'll go ahead and call an audible and not do any of this. But I'm kind of thinking, the first 10 or 15 minutes, or the first 10 minutes, let's say, are previous trades. Any trades maybe I did in the afternoon, or talking about maybe what I did that morning if we weren't together for that morning. And then the next 10 to 15 is going to be, I want to do some kind of educational piece. I want to do some kind of like dedicated teaching moment, some kind of dedicated teaching section. Like maybe we talk about intrinsic value that day, or maybe we talk about volatility crush that day, or whatever. Like there's so much that we can continue to learn and so much that we can continue to study together. I really think let's do that. Let's do that for 7 minutes, 15 minutes, 29 minutes, whatever it is. There's some dedicated slot that is there for education. Now, a lot of times it's not going to be slides. It's not going to be decks. It's just going to be me and you and the Final Jeopardy pen. Like that's all it's going to be. And we'll just make our way forward through the forest with those guys. And then the remainder of the show will be the questions. Right? I really want the questions to be essentially half the show in the morning and in the afternoon, because I think that's a really, really big part of what we're doing. And that's what I really want this show to be about. Okay. So let's see. Okay. Let me delete that. Okay. So what did I do last night? I just did one trade. I did one EQT last night. And it was I was about to go to bed, and I hadn't seen where the market was all night. And so I just popped in, and I saw that the NASDAQ was up a little bit. I said, okay, the NASDAQ looks a little strong from kind of where it was, on the, like where the futures closed and kind of what had been happening previously in the evening. Like this is a good example where, I popped open the 1 minute chart and I was like, all right, where is the market relative to where it's been the last, 3, 4, 5 hours? Because I was with my family, I was having dinner. Eli had baseball practice. Eli has baseball practice on Thursday nights, which is super fun. And man, that brings like a lot of memories. Talk about taking me back. I mean, the quiz that we're going to have this afternoon is taking me back. But watching my son play baseball as a 9-year-old is really taking me back. And that is super, super fun and awesome. And he's like a blank slate. Like he hasn't played before this. And we practiced some, we played catch some, but like learning the actual skills and like all those kinds of things. And so it's really fun to kind of see him get better from essentially like nothing. Like he's still learning like proper like throwing technique. Like he's still learning like how to round a base the right way and stuff like that. So it's really, really cool. And he caught a couple of big fly balls last night, and he was super, super excited. Like the coach hit like a big fly ball in the air, and he was in the outfield. And you know how it is when you're a kid. I mean, even as an adult, I still do this. Like the ball goes up, and it's like, I don't know. I don't know where it is, right? And it's like you look like a complete drunken sailor going after that ball. But he actually was able to move like maybe, 10 or 20 feet, like to his right or to his left, I can't remember, but actually like track the ball, and then he stuck it out, and he caught it. And he did that twice, and I was like, wow, that's really, really cool. He's super excited, and I was excited too. Obviously living vicariously through my son a little bit, as every father does. But all right, we did the M&Q trade right there, and then that was that. Okay, so the market's about to open. Let's see. Oh, wow, Grace is in the house. Look at Grace. Grace is supposed to be on vacation, guys. So Grace has been off the last couple days. That's why it's just been me and Ryan holding down the chat, and I think we've done a mighty fine job. Like, I would put our rating as a self-evaluation right at that B- level. Like, I think we've done a really, really solid job, which is about the most you can expect out of me. And so there you go. Well, Grace is here. That is awesome. And I see the questions are already coming in. I'm going to try to get to as many as I can here in the next couple of seconds. But let's go ahead. Let's trade this open. So the market's about to open. And, once again, I mean, there's nothing to do with our positions. Like, our current options positions are all very much in just a wait-and-see type of situation. I mean, Apple, GLD, and IBM are do nothing. Marvell, that stack of cash, set ablaze. Like, it is ashes now. It is over. It is not coming back. MES, this is very close to our profit target. I still maintain, a profit target of around 50% of max profit. That is still kind of the tried and true, in my opinion, when it comes to short premium. There are times where I might go for more than that. There are times where I might, not go for more than that. I rarely go for more than that. There are times where I might take it off early if it's overperforming or outperforming, we're a couple days into the trade or what have you. And so I will do that too sometimes. I started to kind of tinker around and explore with that later on in the FTTP days, RIP, of course. And so we might do that a little bit. But here's your market open. So there you go. There's your market open. So the market's a little bit weak on the open. I'm not opposed to maybe sneaking in with a long here. And we got Cousin Kev coming out at 10 o'clock, though. So I want to be a little bit mindful of that. But I'm not going to get, because of my portfolio delta, and you can see my theta is super negative, but that's all because of Marvell. That's all just because of this guy right here. Wait, you're telling me they're going to let me get out of this for 56 cents? No, there's no way. There is absolutely, 10 cents. That's probably closer to reality there. I was like, there's no way they're letting your boy out for 56 cents. I don't even think they're going to let us out for 10 cents. Like, here, let me see really quick. We can trade that in a second. I want to see if they'll give me 10 cents on this guy. There's no way. I don't think we're getting filled. Yeah, we're not even going to get filled at 6 cents. I'll see if they'll let us get out, though. Yeah, there's no way. This thing's gone. It's gone. That was all just smoke and mirrors. It's not going to... Whoa, we got filled at 6 cents. Whoa. We got filled at 6 cents. You guys see that? Man, this Marvell trade's not coming back. It's done. So we basically just saved, because there's no commissions to close that tasty, which is super nice, right? And so you got to pay some fees. You're going to pay the man somehow, right? But we didn't have to pay the man that much. And so I think maybe we netted like, maybe $5 on that closing trade. Man, that's pretty nice. I mean, that's like, if you find a deal on Ghosts, that could be like 3 Ghosts right there. Like, that's really, really not too bad. And so Marvell is gone, and then that is that. And so, all right, so now let's see. So the market's just kind of chopping around. I imagine they're going to be waiting for Cousin Kev. Like, I imagine they're going to be waiting for that guy, for Cousin Kev to take the stage, and so that's going to happen at 10. So we'll probably go a couple minutes over 10 today, just because I want to see what happens when he comes out. But let's go ahead and, man, I want to buy that NASDAQ right there. That looks really solid. But I want to be a little bit disciplined, though. I don't necessarily want to, we're pretty even now, actually. Yeah, I think we will buy some NASDAQ. What could possibly go wrong? So I kind of think I'm going to let it reach and bring me in here. Yeah, I'll do like 61.75. So we'll see if we can get filled on that NASDAQ. And my deltas are pretty neutral now. I mean, for a while there, I was kind of hanging around plus 20, plus 25, plus 30. And so now that my deltas are pretty neutral, and I'm about to take off this MES short put. So that's going to relieve a lot of deltas from the portfolio whenever that guy comes off. Now, it's not off yet, and it may not come off. I mean, this could be famous last words, of course, because I don't know what's going to happen. But right now, it does appear that we're in a decent spot when it comes to the profit objective on MES. And so let's see if we can get tagged down on the MES trade. Gold is also kind of interesting. I was looking at gold here this morning. Gold's been, back and forth. This is the type of market that I really like to see from an EQT standpoint. I like to see lots of back and forth. I like to see lots of up and down because that tells me that there's a lot of chop and slop. Now, that doesn't mean it's going to stay that way. That doesn't mean that that's going to continue. And I truly believe that the randomness and the unpredictability is going to reign supreme 19 times out of 20, or maybe 20 times out of 20, or maybe 21 times out of 20. The randomness and the unpredictability is really what I'm kind of putting my hat in the ring on when it comes to just trading in general, which might seem counterintuitive because the EQTs appear to be so directional on entry, which they are directional on entry. But in terms of trying to take advantage of these windows of time, this search for equilibrium, I sort of feel like when I do an equilibrium trade, like what we might be doing here in NASDAQ here in a second, I actually don't really feel like I need to be directionally correct, which sounds kind of contradictory, probably because it is a little bit contradictory. And it's a little bit of a misnomer because you obviously have to be directionally correct to be correct on an EQT. But the profit objectives are so modest, right? Like what I'm going for is so I hate to call it small because it's not small, but it's so modest that it's like, man, you really just need a little bit of movement back and forth, a little bit of chop and a little bit of slop. And then you can kind of move forward to whatever you're trying to do. So gold, gold's been back and forth. It's been up and down. I mean, if we get a rally in gold, here, we'll go into MGC. Let's do our first gold trade potentially together. And so if I go to, let's see here. Yeah. So this is what's kind of tricky, right? So if we look at gold, this is why I love trading gold. I love trading gold. I love trading silver. But it's a little bit different. Again, like when I'm trading, it's all out in the open now. Like when I'm alone in the cave trading, that's a little bit different because it's just me and it's like, the neighborhood lion and the neighborhood tiger and just me. And we're all in this cave together. And it's like, all right, if this doesn't work out, I've just got to share it with the lion and the tiger. Like it's not that big of a deal. Now I've got all you guys. It's like, well, if this doesn't work out, like it's all out there. So I'm trying to be a little bit more buttoned up with what I'm doing. I think so far we're doing an okay job of coloring inside the lines. But when it comes to the metals, I really do like trading the metals. I like trading MGC, and I like trading SIL too. But I really like to have premium available against an equilibrium trade that might go against me. So how do you do that with MGC? Well, it's a little bit tricky because there is no options in MGC, which you see circled on the screen here. How do you do that in, SIL? Well, that's also a little bit tricky because there are no options in SIL. And so, in my opinion, what I have found to be a reasonable substitute for premium against, a futures that goes against you. Like MES, you've got MES options. MNQ, you've got MNQ options. And so that's all easy. It's very seamless. It's already kind of structured and set up for the premium that you can lay out against an equilibrium trade that goes against you, which essentially just becomes a legged into covered call or covered put. That's really all it is. But with MGC and SIL, it's a little bit trickier. And I have my eye on this NASDAQ because I wouldn't mind getting short here either. And so hang on. Let's go ahead and let me put in, I'm going to put in an order up here. Let's see if we can't play a little, can we play a little ping pong? 1675. We're about to get filled like right away. We could play a little ping pong on the old NASDAQ. As we all wait for Cousin Kev, there's your 1675s, okay? So let's see here. I've got my order in. I'll get back to my thought here on MGC. That's a little bit too low. 1675. We could do like, we could do 77. 77.50. That would be about 40 points, I think. I'm no Jacob Perlman. I think that's right, though. 77.50. Okay, so we're short the NASDAQ now, and we see what happens. Okay, but with MGC and SIL, got to go into GLD for premium against an MGC. Got to go to SLV for premium against an SIL. To me, that's the best option. Now, you have obviously some sticks in the mud when it comes to that with, the futures and the spot differentials. You're going to be margined on both, so there's no margin relief when you go in with GLD against MGC or you go in with, SLV against SIL. And so trying to be mindful of that is definitely something that I need to keep on. I need to keep on the forefront. Let's see. Let me delete this circle, though. Yeah, gold hasn't really moved too much since we started talking. It's maybe come down a little bit. Yeah, let's get into MGC. Let's see here. We could buy some MGC. Again, similar type of thing. I really want the market to reach to bring me in. And so that's obviously going to be product specific. And so for the NASDAQ, I typically like to let it reach, 6, 10, maybe 12 to 15 points. For gold, it's typically a couple of dollars. Let it reach and kind of bring me in. And my thinking there is I really want it to grab me and bring me back in the direction I'm trying to get it to go, which is no guarantee. It's not to say that that's always going to happen, of course, because it's not. But it's the way that I like to look at it. And so, okay, so other than that, we've got an MNQ trade that's live. We've got an MGC trade that's working. Our MES situation, let's go ahead and put an order in here. Let's see if we get filled. I'll put an order in at 34. Yeah, that'd be 50% of max profit. Let's see what happens. We'll see if we can get dinged on that guy. And then IBM, let's look now that the market is open. Let me just kind of take a quick gander at the book here. So Apple at 317, got my strikes at 285 and 335. This is very much a classic cookie cutter do nothing scenario. And so with Apple, short strangle, stock is between your short strikes. In my humble opinion, again, I cannot tell you what to do. I would never even begin to try to tell you what to do. All of this is purely educational. It might even be a wee little bit of entertainment, but none of it is intended to be actionable, right? You need to consult a professional for those things, and I am an internet rando. So keep that in mind as we move forward here through the forest. And so Apple, we sit tight, we do nothing because of the fact that everything is out of the money. GLD, similar type of thing. It's moving along quite nicely now. It's perfectly centered between the strikes. We do nothing on this trade as well. And we sit tight and just let Theta do its thing. And then IBM, it is also moving along nicely. It's getting closer and closer to the profit target. I would probably be looking to take that guy off at 225. I've got, that's not what I wanted. Hold on. That's not what I wanted at all. Hang on. Let's do, this guy is what I wanted. So 450, right? If I look to buy that guy back at 225, that's about 50% of max profit. So That's what we typically go for short premium. Again, that's my default setting. That's where I'm typically living. And so right now you can see it's marking at 292. And so we've got a little ways to go to get to 225, but it's getting there. It's moving along, and everything is all good. And that's the thing about selling premium. I mean, selling premium, it's a lot of sitting, it's a lot of waiting, it's a lot of doing nothing, right? It's a lot of leaning into that DNS, that kind of that do nothing strategy, of course. And so, okay, so that is IBM, and that is all right. So we're taking a little heat on this NASDAQ trade. And by a little bit of heat, I mean 60 points is really nothing. But this is good because a lot of them have worked out so easily. It's like, man, that's not, you guys need the full picture. Like the full picture is you get the easy ones, you get the medium ones, and then of course you get the really, really hard ones. And so clearly we've had a number of easy ones to this point. So we're due for some hard ones. Not that I'm going to go out of my way to kind of find those hard ones. They're just going to naturally kind of find us. And so, all right, so that is that. Let's now go to, let's go to some questions. Let me see where you guys are at on the questions, because I see you guys in the chat, and I appreciate you guys so very much. All right. Let's go. Okay. So, okay. So first and foremost, okay. So hold on. A little bit more housekeeping, then we'll get to the questions. Okay. So yesterday afternoon, there was a huge discovery when it comes to the song, right? So Archer Fire, I see your questions about 21 Pilots, Polarized, blah blah blah. Okay, so Archer Fire guessed. This is for the intro song, right? It has not been guessed yet, but I'm done giving clues. We're done giving clues because you guys are getting too close now, right? You guys can figure it out. You guys can figure it out from this point. I have full confidence in you. And in that, in full confidence, I mean it's about a 30-35 delta that you guys are going to be able to get there. So Archer Fire guessed Stressed Out by 21 Pilots. That is not the song. But you're thinking along the right lines. Now, again, you could be thinking along the right lines in terms of the band. You could be thinking along the right lines in terms of that type of song. You could be thinking along the right lines in terms of the title of that song and kind of what it conveys. You could be thinking along the right lines in terms of when it was released. I'm not giving you guys any more details because I was reading through some of the ones last night. And I see you today, Archer Fire, with Heavy Dirty Soul, Polarized, The Judge, a bunch of 21 Pilots songs. It's none of those. I was looking last night. Magallo said Safer. I think Magallo said Pumping Up Kicks by Foster the People. Or maybe Magallo said Safe and Sound by Capital City. Okay, y'all getting too close. Y'all getting way too close now. I'm done giving out clues. You got all the clues you're going to get. And so we know that it's not a person, it's a band. We know that it was released before 2016. We know that it has nothing to do with money. And now we also know that, the Stressed Out by 21 Pilots was the closest best guess to this point. And so, okay. So, awesome. So let's go to some questions now. Let's see where we're at. Okay, let's see. Point B is in the house. What is going on there, Point B? Man, I appreciate you, my friend. Doc, can we have your speech ahead of Cousin Kev? We need for the Friday move, sir. You guys have already gotten my speech. I've already given you guys all I can give you. And I'm going to try to give you a little bit more later with this afternoon quiz. It is coming, and I am coming for you. So you better have your LMNT. You better have your Ghost. You should probably have a Banana Natty because you're going to need it to kind of drown your sorrows when I absolutely crush you on this quiz. I cannot wait. There's going to be easy questions. There's going to be medium questions. And there's going to be hard questions. It's going to be awesome. I cannot wait. So do not miss the afternoon show. That's going to be at 2 o'clock today. And so, but thank you there, Point B. I appreciate you so very much. So very much. Oh, and Point B goes on to say, Doc, is it a 1 minute or 5 minute rule and then the clock ticks for you to send us the ghosts? I don't know if it's the 1 minute or the 5 minute, but you all got to guess the song. Nobody has guessed it yet. Nobody has guessed the song, but you guys are getting way too close. And so no more clues. No more clues, no more questions. I'm done with all that. You guys can figure it out. And by that, I mean, I'll give you guys some more clues probably on Monday. Ordenu, hello, Dr. Jim. I've been doing long call verticals on beaten down stocks with IVR less than 30. 45 is DTE at the money. I try to pay no more than 50% of the spread. Do you think this is a good strategy? Absolutely. Right? Now, again, I think it's a good strategy in theory, right? I can't tell you what to do, right? So this is all theoretical. It's all hypothetical. It's a fictitious world that is not the world that we live in right now. But when volatility is lower, right, and you're trying to find things to do, right, it can be difficult to do short premium trades because, again, short premium is really effective. It kind of works all the time because it is so effective. But if I want to kind of tilt the odds more in my favor, then one of the things I might do is wait for volatility to expand for all the reasons we've talked about for so many years on the Tasty Network, and I, of course, will continue to talk about here, on with all the OU content that's coming out. But generally speaking, when volatility is lower, this is where you're looking for other things to do. This is where you're looking for things around the edges to kind of carry you forward. And I think that long vertical spreads can certainly be something that can do that for you. You've got the beaten down stock, so you've kind of got that natural kind of contrarian play there. I love that, right? You've got the low implied volatility. You're paying half the width of the spread. You're using the at-the-money strikes. I mean, that is essentially the checkpoint Charlie checklist when it comes to doing something with low implied volatility and a long vertical spread. I really like that. I really like that a lot. Okay, so let me look at the market here really quick because I have one thing that just popped into my mind. So the Nasdaq's hanging out. We're down a little bit on the trade, but that's not a big deal. Gold, we never got filled on this long, which you can see it in the book right there. Like you see this long right here in the book. So this is going to be a good little teachable moment when it comes to risk management. So right now, just looking at the tape, gold appears to be kind of chopping around this level, right? I am interested in a short gold position right here at right around 46.60, 61.62, somewhere around there. But I'm going to hold off. I'm going to hold off for two reasons. Number one, I'm already short the NASDAQ, and, things do tend to move together a lot of the time. Right, the correlation coefficients between equities and metals is not one for one, of course, but there's a lot of situations where they are going to move together. And so I don't necessarily want to go out of my way to do something that's going to start loading up on the concentrated risk right now. Now, there's a time and a place to load up on the concentrated risk, or maybe there really never should be, at least in theory, but in practice, we all get there. We all get to a spot where it's like, man, I kind of loaded the boat on, I'm long the Russell, I'm long the Dow, shout out to my boomers. I'm long silver, I'm long gold, like I don't know how I got here, but here I am. Right? That's going to happen to everybody at one time or another. It's going to happen to me too here live on the show. You guys are going to see it. But I'm thinking about this and I'm like, all right, let's try to be a wee little bit strategic. I don't really want to get short gold right now. Well, I'm already short the NASDAQ and I've got cousin Kev about to take the stage. Right now, if this were any other morning, we've got cousin Kev, and I think we just had Chicago PMI, which just came out. I think at 10 o'clock we've got inflation numbers, and now I can't remember. Is this the inflation print, or is this the inflation print's estimated forecasted revision? Like, which one of those two is it? Because one is a much bigger market mover than the other. It's that forecasted estimated revision that oftentimes sends the market ripping one way or another. And so let me know. But I'm trying to be mindful of my concentrated risk. I'm trying to be mindful of where I'm at in space, kind of utilizing a little bit of market awareness. And so once cousin Kev takes the stage, I should say, maybe we'll get into a short goal position potentially. But it is interesting that we had the right idea with this long goal. We just never got filled. And so that's going to happen. And when that happens, what do? You just you got to move on. You got to move on to the next trade. And so that's going to happen very, very often. And so, all right, let's see. Let's get some more questions, though. Man, great questions coming in. Wow, so many great questions. Let's see. Let's try to pound through as many as we can here. And then we will see when Cousin Kev takes the stage here in a second. Let's see. BBB fine. Dr. Jim, it looks like Marvell went the wrong way. It did, my friend. It did. Earnings giveth and earnings taketh away. And so it's very much like silver in that regard. Silver giveth and silver taketh away as well. So for my silver traders out there, man, you guys are my people. You guys are 100% my people. Just make sure you've got those BVDs on subscribe and save if you are trading silver. And so yes, Marvell did go the wrong way, and so that is a little bit sad. Let's see. Point B, Archer Fire. Andreas in the house. I opened a Nibis. A Nibis puts credit spread 230-220 for a September 306 credit. How would you manage it? Andreas, Nibis. Is this like Nabisco? No, it's just Nibius. Nebius. Okay, all right. So we've got Nebius Group. You said it was a 230-220 a put credit spread. Okay, so yeah, 230-220. Okay, so you're in the money now. Right, okay. So again, I can't tell you what to do. You have to decide what to do on your own merits. So this is all a theoretical construct. However, when I am in a defined risk strategy, a short put spread, and it's fully in the money, then that's a situation where doing nothing, in my opinion, is the move. Doing nothing is the play, because with defined risk, I want to control my size on order entry such that I'm okay taking this thing all the way to the end. Now, you said it's September, right? September, you've got plenty of time. You still got several weeks to go, maybe even longer than that. I mean, September is what? September is like 21 days. So you got 21 days exactly. And so this is very much a do nothing scenario, in my opinion. You control size on entry and just let it play out one way or another. That is kind of the modus operandi. That is the default setting for a defined risk strategy, in my opinion. And so if you're looking at the situation, you're thinking, man, I don't really feel comfortable taking this thing all the way to the end because max loss is making me a little bit squeamish. Max loss has kind of got my knickers a bit twisted up. If you're in that situation, then in my opinion, that's a sizing issue. Like, that's something that needs to be addressed on order entry. That's not a strategy issue. That's not a management issue. That's a sizing issue. And so I like to be in a situation where, really with all of my trades, defined risk, undefined risk, equilibrium trades with the futures, whatever, but specifically with defined risk, I want to be in a situation where I can walk away from it completely and I can just almost kind of forget about it. And so because of that, I will be in a situation where I can let it play out however it's going to play out. I can remain objective. I can stick to my mechanics. I can stick to my adjustment protocols and just let whatever's going to happen, and just kind of go from there. And so that's how I would think about that there, Andreas. Hopefully that helps you a little bit. And so let's see, Michael Rogus in the house. What's going on there, Michael Rogus? I've really enjoyed our dialogue there via the old email. You guys can always email me, by the way. I'm jim@optionsuncapped.com. Ryan, go ahead and put my email in the chat, just so people have it. It's jim@optionsuncapped.com. If you guys ever want to reach out, I'm happy to do it and happy to help however I can. And there you go. But Michael Rogus says, I cleared some serious BEUs on that NVIDIA butterfly, enough where I can afford to take my wife, but not the kids. It's rice and salt pork for them. Yes, that's how you do it, my friend. We've got to train these kids up, right? Isn't that right, Michael? We've got to train these kids up in the way. Right? We've got to do it. And how do we do that? These kids need to be standing while they eat. These kids need to be standing during dinner time. Did you know that that's what they did in the olden times? Back in like the 12th or the 11th century or whatever? Like when they were like standing outside of the tents and they were like waiting for enemies to come in, the kids had to stand guard while the parents ate. Right? The kids had to stand up until the parents were finished. Right? The father took the bath first. Right? Then all the kids got in the dirty, grubby water. Man, these kids got it so easy in 2026. These kids they're not standing while we eat. What are they doing? They're standing by the door saying, is my Amazon Prime order here yet? Right? It's still 4 stops away. This is bullcrap. That's what these kids are saying. That is not right, man. That is not right. We got to train these kids up in the way, Michael. I love it. Salt and rice, pork for them indeed, my friend. And so very nicely done. And good job on the NVIDIA trade as well. Very, very good job on the NVIDIA trade. And so let's see. We've got more. Wow, man. This is crazy. Look at you guys, man. You guys are getting it done in this chat. Man, I appreciate you guys so very much. All right, let's go ahead and let's see. Oh, point B, I'm curious to learn the doc strategy on getting in and out on the MNQs, EQT trades daily. Yeah, I mean, it's, again, I'm just looking for levels that I like. I'm not using anything to determine those levels, and I'm open to those things. I'm not like so thick-skulled that I'm like, I'm not going to do it. I'm not going to look at a chart. I just don't think there's anything there. I'm just not sure there's anything there. Now, if I were to look at a chart, I'd probably want to see it like sweep out a high and then get short, or sweep out a low and then get long, right? Because obviously that's where all the subreddit army is placing their stops. And so I would like to know, like, where are these stop hunts taking place, if they are really a thing, which that's 50-50, of course. But I'm not convinced there's anything there. I actually like to just look at the tape itself, to just actually watch the price movement. And I feel like over time you can develop a bit of a feel for an index or a stock. Now, there may not be anything there, but that's okay, because I actually feel like, between 9:30 and 10 in these equilibrium windows, where the market is kind of actively searching out this equilibrium point, it is the very nature of the search for equilibrium and the statistical underpinning of things like, the leptokurtic distribution and even potentially, mean reverting price. Ooh, man, we said it. It's out there. Don't let Tom hear that we said that, even though he 100% agrees with how he trades. But yeah, a little bit of price mean reversion in that window, coupled with these mathematical underpinnings, I think is enough to carry us where we're trying to go. Now, here is a super crazy thing. So point B, I understand this is all kind of generic and vague. I'm trying to drop breadcrumbs on the trail for you guys from one stream to the next. So if you watch on a regular basis, hopefully you can kind of begin to put the puzzle pieces together. And I will have more formal resources around these things available to you guys later on in the fall. And so you have that to obviously kind of look forward to. But here's one thing that's a little bit crazy to say. And we're getting very close to cousin Kev. I actually think, so I've been testing this for about 6 years now, maybe even a little bit over 6 years. I actually think, and this is a crazy thing to say, I know that. I actually think if every single time, every time, when I sold in EQT, if I had actually bought instead of sold, I would have the same results. I actually think if every time I had bought, I would have sold instead, I would have the same or very similar results. Now, that is a crazy thing to say. And that flies completely in the face of everything I'm saying about short-term contrarian, about this, that, the other thing, selling rips, buying dips, whatever. And I'm aware of that. And I'm saying that to make a point. The point is, I really do think that the randomness and the unpredictability reign supreme. Now, again, you're trying to piece this together. I've been wrestling with this for 6 years, and I still don't think I have it figured out. I really, genuinely, truly don't. And so I'm just giving you guys the stream of consciousness. I'm just giving you guys my genuine, authentic thoughts as I have them. Now, right now, you're getting a lot of things I've been thinking about for 5, 6 years, whatever. But as time goes on, you're going to get the new developments. You're going to get the refinements and the polishings around the edges. But I really do think that the randomness is so powerful that it doesn't really matter what we do in that window, which I know is crazy, crazy, crazy. Do not let the internet know that you are even thinking those things. And do not let the internet know that I said those things. And by that, of course, I mean share this and clip it and link it everywhere, because bad news is still good news, right? Bad news is still good news because we need the clicks, we need the eyeballs, and we need the heartbeats on this stream. And so I actually think that in the windows, it's just such a magnetic thing around where the current price is that it can be really, really powerful. I mean, look at what the NASDAQ has done this morning. This is actually a perfect example of what I'm talking about. It's actually chopped around. We just didn't get the level right. We just didn't get the entry price right. I mean, it's chopped around from, I'm looking at it right now. It's chopped around from, 29,690 or 700 down to 29,650 for the last, 10 minutes. I mean, there was 3, 4, 5, 6 EQTs, like for the pickings, like right there. But again, we didn't get the level right, and you're not always going to get the level right. I frequently get the level wrong. And so yeah. So, okay, hopefully that helps a little bit. But I appreciate you guys. Okay, let me try to get to one more question, and then we are going to stay for a couple extra seconds. I see Steve Stam. Give Jim a like if you haven't. Yes, please do. Please hit like on the stream if you haven't done that. That helps us out a lot. Please subscribe to the channel if you haven't done that yet. That helps us out a ton. And maybe even share the stream out with, the Twitter-verse, the X-verse, the Instagram-verse. Maybe even toss a little TikTok out there. Hey, man, put this on Etsy. Make an NFT. Put this guy on Etsy. Man, let's get some of those 45-year-old homeschooling moms in the mix. Like, let's do it, man. There's an untapped market. I homeschool my kids, and I sell a little premium. Like that. Like, that's what I do to kind of make ends meet. And there you go. Whoa. Man, right before Cousin Kev, look at Ramon. Come on, man. You guys are too generous, man. Ramon coming in with a $100 super chat. Everything I know about options, I owe to Dr. Schultz. Now with these EQTs, my trading is even better every week. Sharing 50% of my win this morning as I took the other side. Oh, it's so perfect, dude. Oh, my gosh. It's so perfect. Oh, my gosh. So, Ramon... So thank you so much, man. Thank you. Man, you're too generous, but that is so perfect. Oh my gosh, Ryan, please, if you can you take a screenshot of that? I don't want to lose it. I could do it later or whatever, but take a screenshot of that. I'm using that in all kinds of advertising stuff because that is such a perfect comment. Oh my gosh, Ramon. Man, Ramon's been with me since the beginning. Wow, look at gold. Gold just shot up. Wow, Ramon, thank you so much, my friend. Like, you're way too generous. But okay, guys, so Cousin Kev is about to take the other. That's so great, man. Oh, man, these Friday shows with these quizzes, man, I cannot even wait. I'm going to be so excited for the next 4 hours. You guys don't even know. Please come back for this quiz. It's going to be so much fun. You guys are going to get crushed. I can't wait. And so, but Cousin Kev is going to take the stage. So let me know, guys. I got to know. When he takes the stage, let me know. I need to know the wardrobe. Is he going business casual or is he going mountain man? Like, I need to know. Like, we're Jackson Hole, right? Is he going refined or is he going rugged? Like, you guys got to let me know there in the chat. What did Cousin Kev do? Because that is obviously going to play a big role. I'm really glad we didn't get... Oh, wow. Okay, so we just got filled on our gold. Hold on. Now we're moving. We got filled on our gold, and then we had a chance to get it back. Okay, hold on. Let's get... Now things are moving. Yeah, now we're having fun. Okay, let's see if we can get gold. We just had it at 60, but I missed it. Okay, so there's your gold at 60s. Okay, so now we're trading. Okay, all right. So we just got our... You guys see that long gold? I mean, that was some wild stuff, man. And so now we got our NASDAQ on. Okay, so now the gold has rallied. Okay, so now Cousin Kev has come out. Yeah, sure. I'll do a short gold up around 80. Yeah, sure. 46.80. We can play it. Let's see. Okay, so this is kind of like an economic data print in a lot of ways. Okay, so now I'm super distracted. So hold on, guys. Let me try to focus on this. Try to keep the account above zero. And so, okay, so we got that one gold trade. That was nice. We just had that guy sitting out there. Had we gotten short at 61, it would have worked out. We would have taken a little bit of heat on that, but it still would have worked out. So that gold trade helped obviously a lot. Yeah, I really don't like having. I like having the closed on the book so I can see what happened. Okay, so now things have settled down. So let me know what is Cousin Kev doing right now, because he's doing something, because the market is moving. And so gold has settled down a little bit now. And we may get filled on this long gold. We've got our order in at, 51 again, right? Getting back in around 51. That's fine. And so you notice right around kind of this 10 o'clock. Oh, yeah, well, we had the inflation drop. We had everything drop. Oh, I bet you that was... Okay, so there's our gold at 51. Let's get an order in at 50, 51. Yeah, we can go up to we'll go for a little bit more. Maybe 63.90. So now I like the fact that, we're short the NASDAQ and we're long gold. I kind of like that as almost like the term I've been using in my head, at least for the last couple of years or whatever, is kind of like a staggered pairs trade. So it's a pairs trade from the standpoint of they're kind of offsetting each other, but they didn't go on at the same time. And so I did one at one time, I did the other at another time, but I really kind of like that just to control my overall directional risk, right? I'm obviously short the market via NASDAQ and I'm long gold, obviously via MGC, and now we sit tight, and now we do nothing. And so for gold, though, if I do start taking some heat on this MGC trade, then what I'm going to start to do is go in and probably sell a GLD call against it. Like, that is how I'm going to begin to take some heat off the table when it comes to gold, because gold can obviously move away from, it can get away from you pretty quickly. And so gold is at 37.40. Okay, let me minimize my stuff here. 44. Okay, that's good. Yeah, okay, so now I think we sit tight. So, I mean, again, the DNS is the move when it comes to these EQTs. And so, for the most part, I want to give them room to breathe. I want to give them room to roam. I want to let them explore the pasture, as far as they need to. But I also want to be mindful of, okay, at a certain point, I'm probably going to want to take some risk off and cut my size and bring in the time and bring in the volatility. And when it comes to, the NASDAQ, that's typically 150 to 200 points, if not maybe 250 to 300 points. When it comes to something like gold, I'd probably be looking for this thing to probably move $25, $30, $35 before I lay some premium out against it. And right now it's obviously moving quite a bit as the market moves around and it is digesting, the inflation print and Cousin Kev. So, okay, so hold on. He's taking the podium now. E-Media, looks like a light blue tie. Wow, so he went baby blue. Wow. So you guys know what that means. If he goes baby blue, we're all stepping in some doo-doo. That is 100% the playbook. So unfortunately, it looks like this second gold trade is not exactly doing what I have politely asked it to do. But the NASDAQ is helping out a little bit. So let's wait a couple of seconds and let's see if something happens here. And then we'll kind of go from there. Let me see if there's any questions. Let me get to maybe one or two more questions. Let's see. Jonathan Chesson, what's going on there, Jonathan Chesson? Shout out to the OU community. I appreciate you so much there, Jonathan. So I wonder if we should do a revenge trade on Marvell, a short put or a bull put spread, maybe. Yeah, I don't know. I mean, we could, of course, But I think I'm going to sit tight. I think I'm going to do nothing when it comes to kind of a revenge trade in Marvell. I mean, we've already got, we've got some doo-doo that's cooking right now here on the books with the NASDAQ and gold. So I kind of want to focus on these two things before I spread myself too thin. I've got 8, I've got 12, I've got 17 positions on in the portfolio. And that's not going to be super amazing. But thank you there, Jonathan, for the question. And I hope you didn't tail me in Marvell. You guys need to take the Ramon strategy, which is the way to do it. And so, all right, so let's go in, though. Let's spend a couple extra seconds here. So let me look at GLD. So let me kind of show you guys, because I may end up doing this. I may do it right now if gold goes down. If gold gets down around 20, I'll probably go ahead and do this. But if I go into GLD, I might do, let's see, let me delete those circles. Okay, so now, yeah, gold's around 14, 15. Yeah, that's not super amazing. So here's what we're going to do. We're just going to go in and go to GLD, and we're going to be margined on this too alongside MGC. Right. And so, again, we've been waiting for an EQT that hasn't worked. I would say this gold trade is one that has not worked. And so this is a scenario where it's like, okay, now you have one that doesn't work. What do you do? Well, again, I want to be small enough to where I can do nothing. Right. And so if I wanted to, I could hold this MGC trade essentially indefinitely with no premium against it, because I'm thinking about, in terms of a big move in gold would be like $100 move, let's say. That's only going to be $1,000 on my account, and having a little over $50,000. That's very, very doable. And that's very, very manageable, in my opinion. Based on my risk tolerance, you, of course, may have a different risk tolerance. But if I did want to cover it, which I think we probably will do right now, just to be a little bit buttoned up around the edges, I'm going to go into gold, and I'm actually going to choose the 21-day cycle here, just to give me something that's a little bit quicker turnaround in the event that time goes by or gold even keeps going down. The premium off of this guy is going to come off a little bit more quickly, and it does give me a little bit more flexibility in terms of managing this guy into the future. Okay, so there's your NASDAQ. At least we got that guy back. So that's good. That's going to help a little bit. So I'm going to go into gold, and I'm going to sell this 30 Delta call. Now, this is in GLD because, again, MGC does not have options against it, at least not on Tasty. I saw a couple of people that mentioned that TOS has MGC options. That's kind of awesome, actually. And so if you guys are on TOS, I mean, TOS is a great platform. And so that would be really, really nice if we had some MGC premium. But since we don't, and that's just the way it goes. And let's do, yeah, it looks like 465. Yeah, that's fine. So we'll see if we might need a little bit of a rally here in GLD to get it. And then that will be that. So let's see if we get a little pop in gold to get this guy filled. And let's see, I'll go down to 455. Usually when I'm selling premium against an EQT and I really want to control my directional bias, I want to get it filled. And so I'm going to be pretty aggressive with the price discovery to get it filled, because if it keeps slipping away from me, then it's kind of working against. All right, so there's your 450, 456, whatever. Okay, so now we have an MGC trade on. So let's open up the book, and then I got to shut the show down here because I got to be mindful of, the rest of the team, of course. And so MGC, we are long in MGC. We have our take profit order in, which I'm going to delete now, because I don't want that just dangling out there, because now MGC and GLD, they are a package. They are going to go together. But what I've essentially done is, by being long MGC, I'm long gold futures. But now I'm short a GLD call effectively against those futures. And so there is an offsetting component. And so if we can get a rally back in gold, we'll be good. Even if we don't, now we have premium working for us. We have all those kinds of things. And so hopefully that helps. But man, we are way over time. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jim@optionsuncapped.com. We can connect on Twitter. I'm at optionsuncapped, and I'm also at jschultzf3. Come back later today, because now you got to come back, because you got to see, all right, was he able to keep the account above zero? Because that gold situation started to look a little bit gnarly, a little bit nasty. Well, you got to tune in later to find out. And the options quiz, come back. We want to see how much you know. So I'll see you guys at 2.